Hello traders, Gary Wagner here. Approximately 12:30 in Honolulu, 5:30 in New York City on Thursday, the 16th day of February 2012. And this is the daily report for gold and silver. We have gold and silver up, but up only modestly today. When we take a look at our current board, we've got a gold price up about 70 cents, as you can see, 17.28. Silver up about 2 cents, as you can see, 33.45. It was lower through the evening session as we looked at it trading around the world, and as I said, is currently trading up approximately $1.02 unchanged on the day. First chart that I want to take a look at today is going to be our weekly chart. Let's start with it in Henkin format. And we are still green. We're getting close to the end of the week, but we still have a green candle. Market is up on the week when compared to where it closed or the midpoint of last week. But what I am noticing is something we talked about a little bit yesterday, and that is this 1741 area. Seems to be resistance that gold just can't seem to get out of its own way. You can see that right in here. And there is no doubt, although it is a little bit lower than this high here, and this, of course, is going to be our 1802 area, and then here is going to be our record top right in here. But you can see that, at least on a tentative basis, at least for now, it appears as though it is having some difficulty getting out of that one particular area, that resistance zone. It seems to have the inability to break above it. Now, traders, you get a different picture when we go to a straight candlestick chart. Again, same weekly chart. All I've done is convert it. And really the big picture, or what becomes evident when you look at it in this way, is really these dojis that we've gotten over the last 3 trading weeks, a very, very small contracted range right in here. And what that small range is indicative of is a market that's either top-heavy and about to reverse. That is one possibility. And then the other possibility is that the gold market itself is unable to determine what direction it's going to move from here. In other words, it's in a state of flux, so to speak. So we're going to have to watch it very closely. But when we take a look at the last 3 weeks of trading activity, you see these new highs, at least in the 2 prior weeks. We didn't get one here, but it doesn't have the ability to either A, close near the highs, and we do have an up week. So that is a positive statement, but in no way is it a grandiose or large move. Traders, we are looking at a 360-minute. This is a Henkin format chart. Let me go ahead and expand on that. And we've been talking about the fact that it does appear, at least on a tentative basis again, that we could be seeing this triangle formation as the fourth wave. That would be this minor wave. And we can simply look at it as the market has been contracting, but you can see we do have these series of lower highs and a series of higher lows. When I say higher lows, I'm comparing these lows right in here, here, and of course the beginning of this rally. We're going to have to see, because this market is, as I said the other day, it is meandering lower, there's no doubt. We do have a compression in the range, and that typically will signal some sort of breakout, and we'll have to see where that market wants to go. Silver has kind of been in a world of its own, and we talked about the fact the other day that really what I'm noticing more than anything else in this marketplace is this rounded top. And this rounded top, I have to be honest, does give me some concern, because typically when you see these rounded tops, it's a point prior to the market actually selling off or going lower. Now, there are occasions, such as this occasion right in here, where you get a rounded top, the market goes down a little bit, forms a base, and then continues up higher. But it's not as prevalent as the rounded tops that you'll get before a market tends to move south. So we'll want to pay attention to that. Now, on our daily chart, when we look at the Henkin, we do have red candles. We've had them for quite some time. We've talked about the fact that as long as the market really holds above this 32.90, and that's why our stop's at 32.80. But as long as it can hold above that, there's a good chance that what we're witnessing is the market actually forming a base before trading higher and then moving back up. If in fact that does happen, my target right now, $35 per ounce. Next target after that's going to be about 38 in terms of the big targets or the big pictures. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekly review and wrap up. Bye-bye.